What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol NIO for NIO Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update, and I just love this setup that's going on here. This is one of my favorites. Whenever we get a tight area of consolidation or balance, the market's going sideways, essentially, it's building energy. It's building pressure in this box, and as it breaks out one way or another, we would expect at least to travel into one of the targets, which comes from a doubling of that range. Okay, so here's the double to the downside, brings us perfectly into that area of support from here, as well as off the screen to the left. But we also have, if we were to double this to the upside, notice that that just kind of puts us smack in the middle of this range in here, 37 even. But also, noting that there's very little resistance in here, it would make sense that maybe we make it all the way into about 38, 34. So what I'm saying here is that there's going to be opportunity as this range starts to break. It's really clean here. It's worth sort of talking about and keeping on your radar. Whenever we're dealing with a range like this, we have some particular rules that we can put into place, or just some basic scenarios that we want to watch out for. So today's activity, basically straight sideways, not really telling us a whole lot. If we start breaking down underneath 33.20, obviously, as we mentioned, the target's here at 31.27. Now, how does it unfold? It could be a number of ways. Could just be something like this, and then you see, volume pick up down below. That would give you confidence. Yes, maybe we're making it all the way to the doubling of the range, the low end of support from the daily. The other thing you could watch out for would be a break retest. So we resist here, be on the lookout for inverted hammers, be on the lookout for indecision dojis, right? Those sort of candles here, for then a rejection on the back test of 33.20, and then we roll over into 31.27. So that's another scenario here. Now, what's the bullish scenario? Well, it's both of those things, but in reverse and up and over 35, I would say the whole number. Now, here's where it gets interesting. We also have what we would call a look below and fail and a look above and fail. Let's say the chart does something like this, excuse me there. And then we'd move back inside of, so back above 33.20. Instead of doing this, we actually move back inside, right? What do we know about that? Well, it's a failed breakdown. So what we should do is travel to the top of the range here at 35, okay? So just a number of scenarios, unlimited sort of possibilities here inside of NIO, and all of them have very clear and distinct entry and exit points, right? If it's going to be a breakdown, boom, where's your stop loss go? You don't want to see it back inside of the range. So the stop goes here, your entry's probably here, you're looking for this as a target, makes sense from a risk reward, right? What about something like this on a look below and fail? Well, you know that you don't want it back down and out of the range. You probably just don't want to see it underneath the low here. So your target's up here, your entry's kind of back inside of the range. Again, risk reward perspective, that checks out as being like a 2-to-1 or maybe even better. And if you can move stop to break even, fantastic. So hopefully you're getting the sense that balance ranges like this are phenomenal for a number of different setups to potentially unfold, all involving tight risk. So that's really what I wanted to point out here inside of NIO. If you learned something new today, which hopefully you did, let me know down below in the comment section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.